Weekend. Ira Epstein, and here we are with your weekend edition of your financial market wrap-up. And this wrap-up is for the weekend of Friday, June 14th, 2024. Now, before we get too far along, we got a lot to discuss here in this. I want to remind you it is Father's Day, 50% off sale. So if you get my morning futures video, $398 instead of $795 as your introduction. $448 versus the normal $895. I mean, I've really cut these introductory fees way down, and you get the combo of the two for $845. When you go into the member area, you choose your subscriptions, you do everything there. You can come in, you can cancel whenever you want. You can cancel ahead of time. We invite you to do whatever you'd want to do. It's a good gift to give to somebody as well. Think of it as a Father's Day gift. They're going to see this. Think about the price. It's less than a Starbucks coffee. Really pretty simple, isn't it? Get a drink there. I get lattes. I know what they run, and you'll see what they are. So iraepstein.com, or you can move your cursor anytime up here. It'll take you right where you have to go to the research area, and everything's set for you. You don't need a discount, a code for that. All right. So we have a market that was a mixed bag. You have a story that's got two tails to it. If you have AI, you're a strong market. You've watched the S&P and the Nasdaq, very, very powerful to the upside. Yeah, today you were down a point, Nasdaq was up, but overall that's what's going on. We saw Apple go crazy this week, all right? We saw the speech, we saw everything going on, and afterwards everybody yawned. The next morning they thought about it and said, oh yeah, that's going to make people upgrade the phones. It exploded. It carried everything. If you look at some of these indices and you see the weighting of Apple, it carried up the S&P, 25–30% because of that alone. We have Juneteenth coming at us. So, got to remember, you're going to have everything pushed back. All the government offices are closed. Futures are going to be fine. I don't know that the stock market's open that day. New York Fed Empire State Manufacturing Survey for June is still going to be released on Monday. That comes out at 7:30. We saw Baker Hughes, and they came out and they took another 4 rigs off, and now we're down on a comparison to a year ago week, 97 rigs fewer. So that's in part, as much as we're producing like mad, that's sort of supporting the market. Just think about it. No CapEx spending. You're able to keep prices up here. You're comfortable in the $82 area. And let's give the Saudis a little bit of credit here. It took them 2 weeks to get it done. They came out at first at the beginning of June, and I think they blew it in the speech when they said they're going to put more oil out. They had to really emphasize conditions warranting, and they didn't do it. And the market punished them, and then they came out with their, if you will, the PR, and they got it all done. On the grain markets, at first you were up the past 2 days, and now it doesn't appear the weather's going to be quite as nasty, and they took the weather premium back out. But, you know, when we reopen on Sunday night, you could be anywhere in this grain market, so you got to pay attention to that. On the S&P, be it on the weekly or the monthly chart, if you were to, which you did, you closed, these are all-time high closes on both the weekly and the monthly chart, just on a closing basis. When we look at a bar chart of the weekly chart, all-time high, new highs all the way through. The swing line, which looks at the current bar backwards and says, do you draw the line to the upside or the downside, which I teach in the courses. When you get your morning video, you'll see me reinforce this all the time. And by the way, it's in those videos that I say, buy here, sell there, do this, do that. I talk generality here. I talk specific there. And this market still very much in the bull trend, staying over the 18-week average of closes. So the bias, and I define bias by this. If the market's over the 18-week average, I have an upside bias. If it's under it, a bearish bias. Bias is a filter of the swing line. So as long as I have buy signals per se, by higher lows, higher highs, with upside bias, I'm comfortable in that part. The resistance in this rally is right here. You're at it. The upper Bollinger Band. The importance of Bollinger Bands is that the algorithm adjusts to the market. It gets ahead, behind the market. Markets rarely stay over the upper or lower Bollinger Band, only 5% of the time. So when you come up and you get to these bands, it's not uncommon that you hit them and you back off. It doesn't mean it's a trend change. It means if the market got away from you, especially if you have embedded readings, the market is then a buy on the break until the red line would close back underneath the 80 level. And you're not there at this point. You've got your powerful readings. In the Dow, it's a different world. This doesn't have the wonderful AI. So you had an outside week down. Now, if you take out this week's high, this coming week or the week after, that negates it. But what are you negating? You're really in sideways action in the market. Yes, the trend is down on the swing line. Yes, the bias is down. And yes, I have a target here for the market to get back to the 37,884 level at least before the market goes up. Now, up would be taking out the high of this week. In the Nasdaq, up and away you go. Everything is wonderful in the world of AI until it isn't. There will come a reckoning time when the market might say, you know, we're spending all this money, billions. What are we getting for it at this point? Are we ahead of ourselves? You do remember everybody with electric cars. They're going to buy them, they're going to build them, GM, everybody, Ford, they threw a lot of money there, and then in no time, maybe 2 years, they step back and they go, we've done all that, we've got our plants, we can't sell what we have right now. I am not saying that will happen to AI. Please don't take what I'm saying. But there will be bumps. The market will get ahead of itself. They'll be questioning of what's going on. Not every AI company is going to be okay and just doing wonderful. Competition's going to come. Chip competition will come. NVIDIA has this wonderful lead now, but like anything else, will others be able to catch it, or do they have to catch it? There'll be many questions to be asked. In the Russell, lower highs, lower lows, clear out bearish. So until you take out last week's high, you've opened the door to come down back into the combination potentially of the 200-week average and the lower Bollinger Band. In the 5-year note, well, you've had a market that just looked at it and said, okay, the Fed's holding, but as long as CPI, labor weakens, and other things, away we go. And we did see the jobless claims, and if you looked at them, they certainly, especially the continuing, they jumped to highs we haven't seen in a very long time. So it's not as easy as it was, apparently, for people to get jobs. Now, we'll get another series of jolts and all that. You know that. But the reality of the situation is the way everything is lined up so far, one of the Fed's favorite indices, the PCE indices, is lining up to be a favorable Fed number if you extrapolate the CPI and PPI that you had. You've already come out with the big firms, everybody from Goldman, JP, and everybody giving you their estimates. If you get my full research, I've already covered that. Lower low, higher high in the 5-year. Not really a trend. Wobbling, trying to go higher means lower yield. Same thing here. And it's one of the reasons the auctions have been going well. You're dragging people in that are going, you know something? I want to see what's going on. I looked at the end of the week as to how much money went into money market funds. There's a rush into it. So a lot of people just want to be in AI and money market funds. Seems to be what the market is telling you. In the dollar index, you've fought a battle, and you are fighting the battle at the combination of the 100-week average at 104.63 and the 18-week. Look at how they came together. I questioned all week, would we trend? And so is the market. It's the reason you don't have the swing line, higher lows, higher highs. You have a higher high, but a lower low, and you're overbought. No clear-cut answer. And the flip-flop happened in the euro. Higher high and lower low. And look what you did. You went right down this week, hit the lower Bollinger Band, and you stopped in your tracks. That's so often the case. Doesn't mean you can't go lower, but you hit a downside target and you ran into the resistance. Now, as the dollar stays up, you would think the Canadian dollar would fall, and it did. It too is challenging its lower Bollinger Band right now. the Japanese yen. Governor Ueda did nothing. Maybe they'll do a cut, or a rate hike is the right word for them. Maybe they'll do a hike in July, and they will give us a game plan on what they're going to do in bonds. But how did the market greet that? It was down. You didn't do anything to support the market just yet. So do I think the yen can challenge these lows? I absolutely do. Unless they come out and do some wording like the Saudis had to do to soothe the market, I expect it to be challenged. In Bitcoin, suddenly the market pulling back here to 64,000. So I thought the market would have trouble at 70. I thought it would pull there, but it's given up a lot more. For the week, you're down 6% for all purposes. Now the differential between Brent and WTI. You keep coming up to this 18-week average. You got over it for about a week and a half, 2 weeks right here, and came back, and they keep some narrow. So they're trading about $4 apart. When you take a look at Brent, last week it got down to the Bollinger Band and the 200-week. Right here I said, I'll bet the pros are covering their shorts. Well, you've certainly got a nice bounce, almost 3.75% this week. And right behind it, since they're trading about $4 apart, you get your bounce same way in WTI. Now you're trying to hold together in gasoline on the weekly chart. You're trying to hold the 200-week average. If it can do that, the resistance might be back up at the 200-day. You start taking this out, and you open the door for the 225 area. So you put it all together. Your game plan is, hey, you want to take advantage of Father's Day, get a neat gift, not for an awful lot of money, as you can see right through here. Go to iraepstein.com research, move your cursor to the top, and take advantage that way. I'm Ira. I'll see you Monday morning. You take care.